Central banks are never really independent. They have to coordinate their operations with the Treasury. Okay, there are several reasons for this. One, I've just gone through. Every Monday morning, the Fed and Treasury talk. Okay? The Fed has a projection of what it thinks will be added to bank reserves. Okay? And this depends on how many people are going to cash their checks from the Treasury, how many welfare recipients and Social Security recipients will cash their checks this week, because that will lead to reserve credits. And how many taxes will be paid this week. You can imagine the week before April 15, a lot of taxes are paid. Okay, that means a lot of reserves will be drained out of the system. You might have to put some in, okay, which means the Fed will buy bonds instead of selling bonds. Anyway, they have to coordinate their operations because the federal government is by far the largest economic entity in the United States. Its impact on bank reserves is by far the largest of any entity. Okay? And if they didn't coordinate their operations, the Fed would be stuck with either adding or draining reserves to offset the Treasury by massive amounts every day, hundreds of millions of dollars every single day, in order to make sure banks have the right amount of reserves. The Fed is the Treasury's bank. Modern treasuries don't spend by bringing wheelbarrows of cash up to buy the stuff that they're buying from contractors. They don't deliver wheelbarrows of cash to your home if you're a Social Security recipient. They use the banking system. Okay? So the Fed is the link between the Treasury and the entire banking system. The Fed makes and receives all payments for the Treasury. The Fed is the Treasury's bank. Okay? And for that reason, it can't be independent. This idea that somehow the Fed will prevent the Treasury from deficit spending by saying, no, sorry, no money in your account today, we're going to bounce your checks, is not going to happen. Never has happened, never will happen. If the central bank started bouncing Treasury checks because of insufficient funds, the president will call in the Fed and tell them, stop doing this. You're messing up the payment system, okay, the credibility of the US government. It doesn't happen. So because they are responsible for making and receiving payments from the Treasury, they can't be independent. They have to accommodate the Treasury, and they always do. And the final reason I already went through has to do with the bond sales. So they got to coordinate the bond sales and possibly bond purchases with the Treasury. The Treasury doesn't buy bonds, but it retires bonds, which has the same effect as buying bonds. It has to coordinate with the Treasury to make sure banks have the right amount of reserves. The only real independence that central banks have is that they can set the overnight interest rate target without political pressure. Okay? They can't be called into Congress and told what interest rate to set. I mean, they can be, but they are not. Congress has given them that independence. So they are free to set the overnight interest rate, and then the chairman of the Fed has to go to Congress sometimes and answer questions about it. Congress, if it wants to, could pass a law and say from now on the Fed funds rate will be 1% forever. And this is what the Fed must do. They can do that, but they're not likely to do that. So they've granted them that amount of independence, but that's all there is to it.